and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by our guests on the show. Meanwhile, let's take a look at what the global handover looks like. Well, all of the key markets look resilient. Europe especially, all the markets closed there with over 1% gains. On the data front, UK unemployment fell to its lowest level since 1974 in the first quarter as per official figures. But soaring inflation pushed wages downwards. Eurozone GDP grew by 0.3% in Q1 as economic activity remained resilient despite the effects of Omicron variant and Russia's invasion of Ukraine. Meanwhile, Wall Street saw a rebound. Stocks closed higher as tech stocks lead from the front. In his latest comments, Fed Chair Jerome Powell says that the central bank will not hesitate to keep raising interest rates until inflation comes down. Stocks in Asia, meanwhile, this morning are trading mixed. Japan's economy shrinks 1% in the Jan to March quarter. For our own markets, SGX Nifty is indicating a quiet open in the red actually. We put the stock spotlight today on ITC ahead of its numbers. Indian Oil, Airtel, IRB Infra and DLF for their Q4 report card and Zydus Life Sciences where some fundraising plans seem to be brewing. Alright, let's talk about the big story of yesterday, which was the fantastic market rebound. Bulls seemed to be in full charge yesterday. The kind of gains we saw, Nifty more than 400 points jump. There was Sensex which soared more than 1300 points actually. And Metals Pack was the star performer. All of the people, all the market participants right now seem to be asking one question. Will this rebound sustain? Madhuchanda Dey joins us from MC Pro Research Desk. Madhu is here to help us understand this big million-dollar question and more trends that are panning out in the market. Good morning, Madhu. What do you make of yesterday's uptick in the markets?
You know, the markets are in a state of confusion globally, no doubt about it. And we were mimicking the global trends pretty closely. If you look at from the start of this year, we have been mimicking the global trends, even earlier also during the pandemic, peak of the pandemic. So the markets are clearly oversold, as we say, in the month of May. Out of the total 10% kind of a correction year to date, we have seen close to 9% correction in the month of May itself. So this kind of a pullback rally in oversold markets is not unexpected. So there was a bit of value buying maybe at lower levels, and then the rest of it was short covering. So this kind of movement, two-way movement is what is expected in this kind of state of confusion, and yesterday was no different.
But in the coming days, you're saying that this volatility or these divergent moves in the extreme downside or upside, this is something that investors should be ready for, right?
Absolutely, absolutely. This is not a market where, you know, you can make money by doing one-way trade. In fact, making money with two-way trade also is going to be very difficult. I am sure traders would be complaining about the way, markets have made making money so difficult. I think this is a market where you have to just patiently wait it out. You have to know your levels and you have to know your stocks that you want to really add at those levels. And when those levels come, don't be hesitant. Don't please cut out the noise and start accumulating gradually at lower levels. I think that is the strategy for long-term investors in this market.
Madhu, you were mentioning that the markets are oversold and this kind of a bounce back is only, very much predictable. So given that the market is actually looking oversold, as you mentioned, are there any pockets where you identify or see some value emerging right now after the correction that has transpired?
So while markets are oversold, one needs to keep in mind the fact that markets are not still very cheap, seen in the context of the inflationary pressure. We are close to 19 times 1 year forward earnings, which is not very expensive, but definitely not cheap. But yes, there are pockets of the market where there has been excessive correction. For instance, if you look at the earnings season, private sector banks all have reported excellent numbers. Many of the IT companies have reported excellent numbers. Some of the defense companies, the prospects are looking up. Some of the export-oriented businesses, albeit the margin pressure, the prospects are looking up, especially with the rupee weakness. So yeah, there has been pockets of correction in many of those businesses where the results were quite interesting and good. So yeah, investors can start looking to accumulate them gradually. But this is not a market where you can buy something in one shot and feel that there will be no reversal from that level. That is not going to happen. So you should buy gradually at lower levels and be selective about your stocks, be selective about your businesses.
Okay. Madhu, if we compare ourselves with the global markets, with NASDAQ, with the likes of, what's happening on Wall Street, not just on NASDAQ, but across the board, we are still better off if we look at the YTD decline. Nifty has lost about 7-8 odd%, whereas tech stocks, and especially the tech-heavy NASDAQ index, has fallen quite sharply year to date. More than 20% of losses are seen there. So, since you track this tech space very closely, can you tell us how things are India vis-a-vis in the US when it comes to tech companies, especially?
See, tech is a very generic term. You have all kinds of startup, you have digital businesses, and then you have what we call the IT services companies in India. So here, IT services companies are rendering a service, they're getting the revenue, they earn decent margin, and they're all profitable, extremely cash-rich companies. Whereas many of the so-called technology companies that you are referring to have extremely back-ended earnings. Their valuations factoring multi-year earnings are discounted. So when interest rates are going up, naturally, the present value of those earnings decline. And that is why you see such sharp correction in those stocks. So in terms of the business outlook, so far the commentary from Indian IT services companies are quite positive, despite all the macro noise. So in case if you get them at a decent valuation, which you were not getting in the last 2 years, I think it merits attention.
Madhu, our viewer wants to know which IT stocks do you recommend? Would you like to give out any of MC Pro's top picks in the IT space?
Yeah, I mean, we keep recommending a lot of stocks, and I think the readers can have enough ideas if they follow us. But of course, I've just mentioned. I mean, this is definitely a victim of the volatile market. For instance, Friday, Tech Mahindra came out with a very decent set of numbers, and the stock has corrected significantly in the last few months, and the valuation is extremely attractive. It is one of the cheapest large cap IT stock. So I mean, of course, there are many other IT stocks that we like, but I just since that was our last recommendation from the IT pack, I thought I would just highlight that.
Okay. Madhu, Bank of America had come out with a note on Nifty where they have slashed the target by 1,000 points from 17,000 to 16,000, citing faster than expected interest rate hikes as a bit of a concern. And our viewers are also posting in the live comments asking if market will correct more again if RBI hikes interest rates, which is something that everybody is expecting pretty much at this point in the June meeting. You have a view on that?
See, markets can correct more. I mean, even in the last note that we released yesterday, we have tried to, rationalize the madness which is, going on in the markets. Definitely, from the lows that we have seen, we still see a possibility of 10-15% correction, given the historical track record of market lows. So yes, that is possible. But whether it will be the Fed action in the June meeting, or whether it will be RBI action, that is anybody's guess at this point in time. But definitely markets are in a very confused state, as I said, because it's not only inflation, but there is a looming worry that, the central bank's action, whether that will lead to a soft landing or a hard landing. And that is what the market is fearing. Until data point clarifies that it's going to be a soft landing, this yo-yo kind of a movement is here to stay.
Right. Okay, Madhu, thank you so much for joining in and sharing your insight with our viewers about the confused state of markets. Lots of cues to watch out for. Of course, there's Fed and RBI as well, which is a big event that one should keep on their watch list for June as far as market reaction is concerned. Okay, let's bring on board our technical guest for the day. It's Chandan Taparia from Motilal Oswal. Chandan, thanks for waiting by. How's the trade setup looking? SGX Nifty is looking a tad lackluster right now. It's down by about 0.2%. But do you think we're also getting ready for a quiet open?
Yes, good morning. Yesterday we have seen a strong opening and then market continues cheerful momentum to gain the 400 plus points. And I think after a long time we have seen such kind of decent recovery from the lower levels. We have noticed that most of the sectorial indices have bottomed out. They have negated their lower top, lower bottom formations on the daily and the weekly scale. In fact, the same has happened in the Nifty. After the decline of last 5 to 6 weeks, it has seen the negation of the same. Most of the mechanical indicator has turned from their deep oversold territory. If I look at the derivatives data setup, the put writing is started to seen at 16,000. Put call ratio has jumped from 0.75, 0.78 to 1.12. The India VIX has corrected by around 7% to 22 level. However, still we are at higher zone in the VIX. But if I sum up the entire data setup, we believe that now 16,061 is likely to act as a support to extend this momentum to us 16,500 and 16,666 level. Even 2 days back, we came out with the report that market seems to bottomed out and this spike could extend to us 16,666. And in just 1 day, yesterday itself, it rallied by 400 points. So I think if there is soft opening, that can be utilized for a buying opportunity with support of 16,061 to extend the momentum to us 16,666, which is around 400 to 500 points higher from the current levels.
Chandan, yesterday we saw a massive uptick in the metal space, and we're getting a lot of questions today on the same. There's one from Shubham Srivastav. He's saying he missed the opportunity to buy Hindalco at 391 and wants you to help him understand if he should buy it at the current level of 430, 431 right away, or wait for the price to come below 400. In fact, there's also one query on Vedanta, which I had seen in the show feed. So if you could give us a sense on Vedanta as well as Hindalco.
Yeah, first if I talk about the Nifty Metal Index from last 10 months, it is taking support near to 5,200 zone. Even 3 days back also the Nifty Metal itself made low near to 5,300 and yesterday recovered by around 7% led by short covering. In fact, the global indices recovered, so there is also a reason. And the reason from the China is also the factor which has taken the metal index to up zone. So I think further 3 to 5% rally could be there in the entire Nifty Metal. So talking about Hindalco, I think the recent bottom is processed. Wait for any small decline, put support near to 400. This stock has potential to go towards 444 levels. Talking about Vedanta, here also the negation is visible. Wait for a small dip towards 310, buy with support of 298. An extended move can be seen towards 333, 340 zone in the Vedanta as well.
Okay, all right. The big stock to watch today will be ITC, and it has seen a very good run up ahead of its numbers. Yesterday, the stock closed 4.5% higher almost. Relatively also during the market carnage that we were seeing, ITC looked much better positioned and much more resilient in those trying times. What is the view on technicals?
Yeah, ITC is quite resilient and finding the support base to shifting higher. The stock is trading at highest level of last around 30 months. Recently, we have noticed that the stock has corrected slightly to 250 zone. That is a 50-day exponential moving average. Looking at the derivatives data, the put writing is also visible at the lower strike. On weekly chart, it is all set to give a breakout from a pole and flake pattern. So all these price setup as well as the derivatives data giving an indication for a rally towards 280. So one can buy with support of around 252 for an upside move towards 280 plus in the ITC.
Okay. All right. Let's talk about Bharti Airtel as well. They delivered their numbers last evening. Profits nearly have tripled for Q4. PAT was primarily led by the tariff hikes which the company undertook back in November 2021. There were one-time gains as well. ARPUs have been very strong at 178 rupees. So fundamentally, or rather earnings-wise, it looks like a steady set. But on the technicals, where do you see the stock open?
Yeah, we have positive view on Bharti from lower levels because the stock is negating, is a negative price pattern, even witnessing some bottom out process on the lower time frame. So 685 is the immediate support, and we are expecting it to once bounce to us 735. In fact, we are including this stock as our top pick for the day with the view that 3 to 5% rally could be seen in the counter.
What about Indian oil? Because, this is a stock that we don't talk very often about, but very strong numbers again, highest ever profit and revenue during FY22. They've also approved the issue of bonus shares in the ratio of 1:2 for their shareholders. So good news coming in on the report card. But talk to us about the chart. What does that tell you?
Yeah, in fact, IOC and most of the oil marketing companies are highly volatile. But the good part is that IOC is respecting to a rising support trend line. Recently, it made bottom near to 119 and supports are slightly shifting higher. So I think 120 is going to act as a major support to extend the move towards 131 levels.
Okay, what about Bpcl? Because there's some news flow coming in there as well that the government is weighing selling part of Bpcl instead of the full stake. So again, this stock could witness some action, do you think?
Yeah, so as IOC is comparatively showing more strength than the Bpcl, but if I look at the Bpcl, it is it has taken support near to 330 zone, which is the key support zone even witnessed in the middle of the March. On last trading session also it made low near to 334, 333. So I think this 330 could act as an immediate support for some short covering spike. And in that scenario, the pullback could be seen to as 360 zone.
Okay. We're getting some questions on liquor stocks as well. Santosh wants your view on Global Spirits, and Aditya Kulkarni has written to us and he wants your view on United Spirits. So if you could give us a comparison between the two.
Yeah, so if you ask me about the globals and the McDowell, we track McDowell very well. However, in last 1 or 2 months, the stock remained underperformed. But now it is making the base. Even it is taking support at weekly and the daily time zone. Positive divergence is seen on the daily scale, which indicates some uptick could be seen. So here we are looking at support of around 820 and uptick could be seen to us 880 kind of level. So McDowell is well poised for 4 to 5% swing of 880. Talking about Global Spirit, I don't know whether momentum will be there or not, but let it come near to 1150, 1160, where you can go for some buy on decline or selective buying in the count.
Okay, all right. One more stock that we would like to put the spotlight on will be Zydus Life Sciences. They're looking to consider a share buyback. Board meet will be on the 20th later this week. The stock, if you look at it, it's corrected almost 50% from its 52-week high, which was around 669 rupees a piece. Right now, the stock is perched at 349, 350 levels. So talk to us about an investing opportunity perhaps that Zydus Life could offer right now.
Yeah, in last 10 months, Zydus has corrected from 652 all the way to 320 level. So cut by more than 50% from highs. However, the major trend is negative because the stock is continuously making lower top, lower bottom. But yes, in last 3-4 days, some recovery was seen. So I may not be aggressive in the counter, but yes, will suggest to reduce the position if you see any bounce towards 370, 375 levels.
Two names from the real estate and infrastructure space also, again, earnings candidates, DLF and IRB Infrastructure. Would you like to share your view here? Because DLF, while the net profit was down, revenue also dropped marginally YOY. Their bookings have been very strong. The commentary is looking very very upbeat. So will we see a consequent uptick on the counter as well today?
Yeah, so real estates are high beta name. If market recovers, then definitely some recovery could be there. And the good part is that even after the poor number, the commentary was better. So market will watch that closely. And even the price is getting some stability from last 2 trading session with support over around 313, 350. So I think 320 could act as a support. And once stock can bounce towards 352 marks.
Okay, all right. We're getting a query right now on Bandhan Bank. Looks like the trend is bullish. Can you advise what to do? This is the question from Rajesh Parekh. How is your assessment? What's your assessment on Bandhan?
Yeah, we are positive on Bandhan Bank. In fact, in last 2 days, we have seen good recovery from all the way to 299, 300 to 350. But now it is finding hurdle. And if it manages to hold about 350, I believe 10 to 12% momentum cannot be ruled out. Because if I look at the weekly chart, from last 57 weeks, multiple time it is taking hurdle at 350. So the supply cluster of 350 has to surpass decisively. In that scenario, you can even see the rally towards 380, 400. So here you need to look at the conditional buy. Let it hold above 350. Look for a 10 to 12% uptick in the counter because of its positive price pattern and relative strength compared to the Nifty, Bank Nifty and the entire market.
Okay. Subramaniam is writing to us right now. He wants to know your advice on GSPL, Gujarat State Petronet. Looks like this stock is trying to sort of break out on the upside, but talk to us about what is the trend you foresee going ahead? What is the levels one should watch out for?
Actually, I don't see the clear trend over here because the price setup is in pressure, making lower top, lower bottom. This stock remains more on the sideways, fails to surpass the hurdle. But yes, in last 2 days, some recovery is visible from the lower levels. But again, we have multiple hurdle near to 271. So if it moves about 271, then only I can understand the price behavior towards 295 levels.
Okay, all right. Chandan, we're getting a lot of queries, but we're a little pressed on time. So we'll go across and ask you your stock ideas. What are the stocks that you would like our investors to look at?
Yes, so I'll focus on selective fertilizer name. Coromandel looks good. This stock is showing the strength. Consolidation breakout is clearly visible. On the last trading session, we have seen a good long built up along with rising trading and the delivery volume. So here we are expecting a rally towards 1,010. Apart from that, defensive name are showing the strength, including HAL or BL. So one can focus on here. BL is bottoming out after the correction of last 3 weeks. Major trend is positive. So buying interest could attract here towards 245. HAL, Hindustan Aeronautic, is also forming the same price behavior. So here you can see the rally towards 1750. Apart from that, one can look at the heavyweights name like Reliance, which is again giving you the attractive level of near to 2400, 2500 level from after the correction of 2850. So Reliance, HAL, BL, Coromandel, these are the couple of names which could do generate some alpha with some outperformance to the market.
Okay. All right. Chandan, it's always a pleasure chatting with you. Unfortunately, I mean, half an hour was not enough to address all the viewer queries. So we'll get you back very soon on the show. Thanks again for joining in. And thank you to our viewers for tuning in. We'll be back again tomorrow at 8:30 in the morning. But right now, it's time for Markets with Santo and CJ. So stay tuned.